It'll be interesting to see when the market sort of starts to spin in the other direction if these become the hot topic again, because there's certainly not.
Just being purpose built as it is, nice looking brick building, there's a lot of pros to that, but you got to go in with a plan, right? There's no turnkey element, which, like you said, that stuff fell out of favor in Ontario specifically.
I was chatting with the agent and he said, it's tough for me because we're basically at go a little bit lower, which is probably where this thing's going to sell, and you're at effectively like the price of a house out there, give or take.
Yeah, for 7 units.
You know what I mean? Like, tough.
Yeah, that makes a lot of sense. If you break it down to price point, that'd be a great house hack for somebody.
Oh my gosh, amazing!
Move into the cheapest unit.
All 2 beds too, right? Like So you get in, you house hack one, and you live there.
Welcome back to REI Hot Seat. Andrew Hines here with David Holshoff. And we're back. We're getting straight to the point today. So we're going to be talking about a deal Dave has brought, and I don't know anything about it, which I kind of like.
That's how we do it now.
Yeah, we kind of do it that way.
Yeah, it's all a mystery to you. So this is 10 townhome units.
Yeah.
What's interesting, though, is some of them are 1-bed townhomes. So that's a little weird, but haven't seen it.
1-bed townhomes is weird. That's true.
It is odd. Apparently, they're all 2-story, which is nice. It's in a place called Shallow Lake, which, if I'm not mistaken, although we should probably Google it, is just outside Owen Sound. I think it's about 10 to 15 minutes outside of Owen Sound.
Okay.
Probably check that.
Yeah, I will look that up as you speak.
Yeah. So interesting about this, there's another agent on it. It's going to be off market. I know him quite well. We've done a lot of good deals together. It's definitely priced to sell. It's because it's Shallow Lake. It's going to be a little bit interesting. Am I right?
You're right. I've probably driven through there a billion times. Yeah.
Perfect. It's apparently a cool little community. I street viewed this, and there was some cool development and stuff happening there.
Oh, I've definitely driven through there so many times.
There you go. It's a pass through.
All right.
So ask is 195. I just not even going to run the numbers there. I think that's just a little bit too much. I've run it at $1.6 million, which is 160 a unit. That puts it at almost a 6.6 cap with my underwriting.
Mm-hmm.
It's a blend of 1 and 2 beds with a pretty decently strong rent roll. It's about $14,000 and change a month on rental income.
Just trying to think of how I missed this. Is this on the main street? 10 units on the main street are towns? They're old?
Older, yeah.
Yeah, you wouldn't build a modern 1-bedroom.
No, I want to see it. I got to understand. I've asked for photos. So a lot of times we're getting these before they really even get pushed out. So a lot of the photos and some of the background, it's like prior to them even fully going out to see it, people will call us. So
okay, very cool.
Laundry, 200 and change. This is going to be the same style we do often right now, which is just pick it up, send it to CMHC. There's no CMHC debt on it right now.
Straight to CMHC then.
Straight to CMHC. Yeah. The sellers, there's definitely enough time to do that, so that's okay. At a 1.6 purchase price, you need about $300,000 to close. That includes down payment, land transfer, and all the fun fees. That puts you at 4.5% interest, which I think is probably about right for the size of this deal.
Okay.
That would put you at a 1.42 debt cover and 8.7% cash on cash.
Okay, so it's doing really well.
Very well.
Would you assume, you're just assuming the 85% on the MLI, or not MLI, just regular
not doing
85?
MLI. Yeah, we had just went through a pretty deep analysis with a client and a mortgage broker yesterday on a deal, and they modeled out a lot of scenarios like with some affordability, some energy efficiency, and it really does make a difference. But we're not trying to do that. It's just the filter.
Yeah, simple.
Hey, look, simple, easy. Yeah. So your cash on cash is the next thing that comes up often. Like, we're not taking the equity portion of the pay down of the mortgage and putting that in. We're not doing the annual increases on the cash. This is just
you're talking about the return that you're showing.
You got it. Yeah.
So if you break down the components, your cash on cash is not your return.
No.
Back in the day, I used to have a significant, 2 to 3% appreciation rate built in, even though the market was doing like 6 to 10.
Yep.
I was like being conservative with that. Nowadays, I feel like 1% appreciation.
Yeah. And we don't even factor that. Like,
Yeah, you don't. No, you're just showing one.
Yeah.
Well, you're just looking at it one way.
Yeah.
There's so many other ways. Like if you were to look at real estate in a project-based approach, you'd say, how long do I intend to hold it?
Yeah.
For a lot of people, it's just like forever. But let's just say you did it for 10 years. Let's calculate what your return is. Like, would you refi it all in there? And you work that all out, and you show your cash inflows and outflows personally. And then you can actually work out an IRR, like your actual return on the project, factoring in number of years and compounding and all that stuff. So that's the true way to do it.
100%. And this, in any event, like even if it's just understated, but it's just the number to sort of do across.
So what are we showing as the cash on cash? Not to graze over that. Is it
8.7?
Yeah, 8% cash on cash is pretty good, right? When you're figuring that you've got mortgage pay down in there, building up your equity and stuff. Yeah, you're going to do well.
We're not even factoring the mortgage pay down into this, though.
No, I'm not. But if you did,
it'd be
if you did, I'm assuming you'd be a lot closer to like 15-20%.
Yeah, it'd be huge. And then on top of that, again, like we buffer expenses, right? So we've got maintenance and labor, Capex, reserve, and appliances. I mean, that alone is 10, plus a whole bunch of other stuff. So very, very low barrier to entry on this. We have the ability and the time to take it to CMHC. So it's kind of a very easy pick it up,
turnkey kind of deal. Do you know what kind of work it needs?
So apparently no Capex is required. Even the tenant profile is pretty strong, which I surmise from the the reasonably strong rent roll.
Yeah.
So apparently they're just dated units. That's all.
Okay.
Yeah, so good product.
Yeah, very cool. What can we say about this one?
If you're looking for strong cash flow, low barrier to entry, seemingly, although I haven't seen it, but being told not a lot of work, this is probably a good play for you.
All right, so since we got through that one pretty quick and we only have so much information on it, let's put a pin in that one. Let's talk about the next one you've got here.
Yeah.
And
I'm going to chat with this one. This one probably won't take us too long either. It's just it's an interesting one because it's... Remember back in the day when things flew off the shelves, they had terrible rent rolls. It was a whole thing about, you could turn tenants and it would just be a home run. Well, you'll appreciate this deal. So This is on MLS, okay? This is a 7-unit purpose-built brick multifamily in Brantford, $900K.
7 units for 900. So price per unit wise, it seems like it's fantastic. In a decent ballpark.
And it was $1 million, didn't sell, dropped it to 900, still not selling.
Interesting.
This back in the day would have sold in a week.
Yeah.
So it shows you how wild the change of market has become.
It's a nice looking building.
Yeah. It's here, we'll go through some photos. Like, given the price, you would think that this thing would be in much worse shape.
Yeah, it looks like it's around like nicer stuff. There's some nice new construction buildings nearby.
I'm not overly familiar with Brantford, but it definitely, if you do street view, it's not bad. So let's look at why.
Yeah, is it outdated rents?
That's it. It's interesting because this sort of fell out of favor, right? Like the idea of kind of closing quick, being negative cash flow while you held it, and then getting it stabilized. Those days are now shifted to sending it direct to CMHC.
Yeah, I think it's because people don't see the upside. They don't see the obvious upside like they used to. Like, think about how everyone got saved when property appreciation was 5 to 10% a year.
Yep.
It's like you could make mistakes and the market saved you. So you could be pretty good at reno, pretty good with your budgets, but if you're over, market saves you.
Yeah. What does Warren Buffett say about when the tide rolls in? See who's swimming naked?
Yeah, see who's swimming without underpants or shorts.
Yeah. So I put it to... Oh, you can see the price has been adjusted. I moved it to $800K. It's $114 a unit. It's a 4.9 cap.
It's extremely low cap.
Look at these rents. Weird that they're all $751. That's cause for
somebody
fury.
Started increasing their rents at like one specific year, and then that's just how far they got. Yeah. You kind of almost need to be the buyer who's going to go owner occupied and renovate one unit at a time.
Yeah, seriously, house hack your way to
I'm going to move on in.
To house hack your way to success here. I don't know why that's a 6.5. You could probably get away with a 5.5 on a refi. No laundry income, so I would suspect that it's probably an oversight from the listing agent or what was conveyed.
No
to us.
laundry on site for.
I feel there probably is. It's just that they just didn't
include that. So, what would the strategy be if you were to get yourself into one of these buildings like this? With 7 tenants, a bunch of them are old tenants at $751 a month. I'm assuming they've dug in their heels to some degree. I'm sure somebody asked them if they wanted to go. They don't.
I'll tell you what you don't do. You don't do the rent eviction N13.
Yeah.
We just tell people across the board, but some people still try and they end up in the news. It's like, just don't do it.
Yeah.
Our opinion, our humble opinion. So cash for keys, still, that's a little like, that's the gray area, right? Walking around, giving people money and seeing if they'll leave. We have seen others do, especially if you have a vacant unit, but you have a model suite done, and then you bring all the other tenants into it and say, look, you can a la carte pick. So if you want the kitchen, Andrew, right?
Yeah.
I'll have to have you come up by $100 a month on your rent.
Yeah.
If you want the bathroom, that's this much. You want flooring, it's this much. And I've actually seen somebody do a checklist off what you want done. They take care of the renos. You come up on rent.
So you still have to do an N13 in that case, though.
Well, they don't. So what's interesting, though, is technically, supposedly, this is what our paralegals told us, is even if they do agree to that,
it's not enforceable.
Not enforceable because technically it could be seen as coercion, which is crazy, but that's his
Well,
position.
but it's also an above allowance increase, but you can apply for the extraordinary increase,
Yes.
right?
But this is just that we would agree, and I'm kind of
So they just
relying on
agree,
you not to
just being
screw me.
honorable, right?
Yeah. So case by case, but we actually saw somebody bought it was a small little one. It was a 6 unit, and 1 unit was vacant, and they did that in there, and they said to everybody, totally optional, none of you have to leave. This is just, I'm going to own it forever. But they had a little wine and cheese event, and everyone came over, and he met every tenant, and then just said, this is what I'm going to be cascading to you guys. If you want to talk about it, here's my number. And they ended up actually daisy chaining a bunch. One of the tenants said, well, I'd actually like to have that unit, so I'll come up on price if you just move me into it. And that opened up another one, and he kind of said,
Oh, yeah. So you can do things that way. I wonder if this is still a thing, because I remember Kyle Ford coming on my podcast talking about how he did the N13s, and then once they moved out, he'd meet them while they had the moving truck there and say, hey, what would you think about us just, rather than you having to worry about when we're done and all this, like, what do you think about just, I'll give you an amount right now and you can go find your new place to live.
Yeah. I mean, everything's case by case. Like, technically, no, you're not supposed to do that.
No, you're not supposed to, but then you get them to sign whatever one it is, the mutual.
N11.
Yeah.
So that's the, so N13, the whole building, don't do it. That's just nightmare city. It's also just very much frowned upon. This strategy is kind of the gray area, right?
Yeah.
A little bit of a risk, but again, in my opinion, if you approach people with respect, let them know they don't have to leave, and they're good tenants, they're paying their bills, they're just paying obscenely low numbers. A lot of them are pretty, if they can afford it and they want something, you can do some cool stuff. Like, not everything has to be this contentious landlord-tenant headbutt.
Of course not.
Right?
Yeah,
it
it
can be a
shouldn't
cool
be.
situation where we can work through it. Now, barring that, the other thing is you're just going to, because the acquisition price is so low, you pick this up and it just means your loan to value is going to be abysmal. So you could either do, a short-term financing solution, which we could model out, or because we always show a CMHC number, we can show that you pick this thing up, you're 65% loan to value. Instead of 80, 85, you're still $310,000 to buy it. So that's a lot in comparison to the acquisition price, but still a pretty low barrier to entry. I put the interest rate at 5% because the loan is going to be so small.
Yeah,
that's going to be your problem. Nobody's going to want to do a $500,000 CMHC loan. So it's probably, there's some nuances to this discussion, but the idea is if you have long-term money, you're buying 7 2-bedroom units for $114 a unit.
Yeah.
Like, that's wild. So it might not be, so in theory, it's probably not going to be a CMHC deal, just for clarity.
Unless you went through the whole process, brought the market rents up, and then got them.
Almost certainly, like after it stabilized.
Yeah, but on the front end,
on the front end, no. You're probably going to, close with some other debt on there, and probably, put in that 65%. call it 50, and then
Yeah.
you're sort of cash flowing neutral, all things considered.
Is this building like relatively turnkey? Like nothing really needs to be done?
That's what I'm told. Yeah.
Yeah, like
No big capex.
No,
Because even the photo of the
big
roof,
stuff,
like
right?
if you look at the one photo, like even the roof, it's pretty indicative of like a pretty solid. Look at the windows. Like it's not.
Yeah, they look like newer windows from this.
You don't
This
see.
angle.
These are dated, but nothing we haven't seen before. So it's just interesting how fast that these fell out of favor.
Yeah.
And how quickly, it'll be interesting to see when the market sort of starts to spin in the other direction if these become the hot topic again, because there's certainly
Well,
not.
just being purpose built as it is, like nice looking brick building. There's a lot of pros to that, but you got to go in with a plan, right? There's no turnkey element, which like you said, that stuff fell out of favor in Ontario specifically.
I was chatting with the agent, and he said, it's tough for me because we're basically at go a little bit lower, which is probably where this thing's going to sell, and you're at effectively like the price of a house out there, give or take.
Yeah, for 7 units.
You know what I mean? Like, tough.
Yeah, that makes a lot of sense. If you break it down to price point, that'd be a great house hack for somebody.
Oh my gosh, amazing!
Move into the cheapest unit.
They're all 2 beds too, right? Like so you get in, you house hack one, and you live there. So imagine you were looking at buying. Oh man, should I go buy a townhome or a house out there?
Yeah.
And a single guy, single gal that wants to house hack, or a couple. It's like
fucking brilliant.
Absolutely brilliant. What a genius move. So
make friends with all the tenants, get friendly, work out the deal like you were saying, get them to upgrade their units, and
clean up the building, just make it work. And a couple of years, you've got, like, if this was a 5.5 cap on exit at $2,000 a month on a 2-bed, which I think is more than reasonable. Again, this sale price versus refi number, but I don't think you'd struggle to get a $2.2 million exit value on a refinance.
So a huge lift
on a purchase price of I have 800.
Dude, that's fucking crazy.
It's insane. That's what I'm saying. So these are the exciting deals where you go, guys, if you have some money.
That's insane lift. So we're talking about more than doubling the value of the building. And what kind of renovations do you think? That's the only thing. Like, what are you going to spend?
I don't know, probably 30 a unit would be my guess.
To get 2,000?
Yeah.
Oh, okay. So not bad at all.
No, it's not going to be a ton. Because there's no major capex, right? So again, I haven't seen it, but assuming that the mechanicals are fine, you're just going to clean up a unit.
That's actually like an absurd deal.
I know. This is what I'm saying. These things fell out of favor so quickly. Then, we're selling so many direct to CMHCs, and I love them, and they're great. And what's nice is the risk is gone almost effectively. Like, you have good debt, you're cash flowing positive. It's beautiful. If you structure this right and you come in with the right amount of capital with a good strategy that isn't N13ing the whole building, you house hack it with a couple $100,000, you're buying yourself 7 quality units.
Mm-hmm.
So, not my listing. There you go. The agent should pay us a commission on getting this sold, but this is like, scratch my head that it's not sold yet.
Yeah, that's interesting. That's a very, very interesting deal. People are sleeping probably a little bit on some of these multis that are listed, right? Yeah,
like at $800K, it's 114 a unit, 2-bed. 2 bedrooms.
Yeah. Do we know how big they are?
No. I don't even want to know, because it's going to be big.
It's going to be big because this is like a 60s build, right?
It's going to be everything you think it is.
It's going to be 1,200, 1,300 square foot units.
Yeah. And then you walk in, the units are going to be dated, the windows are going to be old, right? The mechanicals are going to be solid, but a little bit dated, old boiler probably, and that's the building. It's crazy.
Yeah, and that works.
Beautiful.
Usually. All right, guys, if you made it this far, make sure that you join the REI Hot Seat Insiders list. The link will be below the video or in the show notes, depending on how you're consuming this. And that gets you basically into the network with Dave and Jake, and gets you an opportunity to chat with them and talk about your goals and such.
100%.
Awesome. Okay, well, thank you very much for joining us this week, and we'll see you again next week.
Thank you.